Good morning and a warm welcome to our monthly house view. With central banks on the verge of victory in the battle against inflation, the balance of risk is tilting increasingly towards economic growth. The market correction seen in early August was a perfect illustration of this. The US Federal Reserve and its chairman Powell have been clear. The time has come to ease monetary policy, and the central bank will not welcome further cooling in labor market conditions. The first rate cut is expected in September, and the only remaining question is the number and extent of future cuts in policy rates. We are anticipating 3 rate cuts of 25 basis points by the Federal Reserve in September, November, and December. A larger cut of 50 basis points in September could be risky, as fears of recession could prove to be self-fulfilling. Our baseline scenario remains that of a soft landing, but the risks have increased over the summer, and the US elections at the end of the year are adding their fair share of uncertainty. On our asset allocation, we maintain a neutral exposure to equities, and we strengthen our bias towards defensive sectors in this end-of-cycle phase and given the lack of visibility. Prospects for a rise in equity markets are dim, as earnings growth expectations are already high for both the second half of the year and for 2025, and valuations are still high. Bonds are playing once again their role of diversification with a negative correlation with equity markets. We are overweight government bonds with a higher duration than our benchmark. Finally, we remain positive on gold on the back of a weak dollar and falling real interest rates. The war in Ukraine, coupled with numerous geopolitical uncertainties, also continue to prompt many countries to reduce their dollar reserves and increase their gold holdings. Investors will continue to test the soft landing scenario until the end of the year, and markets are likely to remain volatile until the next US presidential election in November. Thank you for tuning in, and I hope to see you next time.